When earnings season kicked off on Friday with the big banks, JPMorgan and Wells Fargo, something actually pretty incredible happened here. Wall Street always seems to struggle with bank earnings, which is why both stocks sold off in pre-market trading. And it looked ugly. But the actual results were truly great, which is why they rebounded. With both finishing the day up big, JPMorgan jumped 4.4%. And even though it's pulled back a bit today, it's still within spitting distance of its all-time high that was set at the end of August. Wells Fargo, which we own for the Charitable Trust, gained 5.6% and rallied some more today. It's $62 and change. It's not far from its all-time high of $66, which was set way back in 2018. I got to tell you, this is the best start to earnings season that I've seen in a long time, so let's take them one by one. Only a month ago, JPMorgan's president and COO, Daniel Pinto, spoke at an industry conference where he seemed to kind of talk down the bank's outlook, especially for the next year. He said that the net interest income NII estimates look too high, and the expense estimates look too low. Boy, that sent the stock down 5% in a single day. And it only recovered partially going into last Friday's earnings report. But when we finally got the numbers, you know what? They were excellent. Managed revenue was up 6% year over year, dramatically better than expected. Net interest income was up 3%, also above expectations. Non-interest revenue jumped 11%. That's another great number. At the same time, the costs were much lower, which is how JPMorgan earned $4.37 per share. Wall Street was only looking for $3.99. While JPMorgan doesn't give much in the way of guidance, it did raise its full-year net interest income forecast. It also cut its adjusted expense guidance, suggesting that the fourth quarter is looking good. Higher net interest income and lower expenses are exactly what we wanted to see. What's driving this trend? For starters, JPMorgan's investment banking business is on fire. It's up 31% year over year. Sales and trading up 8%, led by 27% uptick in their equity market revenue. I found that astounding. Second, their credit card business is doing great. It's up 11% and no credit quality issues. I mean, we're in a Fed tightening cycle, no credit quality issues. Finally, JPMorgan's ever-growing capital cushion and fortress-like balance sheet continue to improve. Firm also repurchased $6 billion worth of shares in the quarter, or roughly 1% of its share count. And once the banks get more clarity about capital requirements for the new banking regulations that are being finalized, they could do much more on that front. But you want to know what was my favorite part of the JPMorgan report? Remember those comments from Daniel Pinto about next year's net interest income that torpedoed the stock in early September? The analysts were all over management on the earnings call, hounding them for more detail about what he meant. Finally, CEO Jamie Dimon had enough and shut down the whole line of questioning by explaining how ridiculous it was to be so fixated on this one forecast, one number. The truth is, JPMorgan doesn't know what their net interest income will look like next year. They're very much hostage to the Federal Reserve and the bond market here. Net interest income is what the bank makes by paying you for your deposits and then lending out that money at a higher rate. It's important, but it's not the be-all and end-all. Given the JPMorgan situation, if the Fed cuts more slowly, that's actually good for them. But trying to predict everything the Fed will do over the next 12 months, that's a fool's errand. And he doesn't want us to get involved, and I don't want to get involved. So whether it was that feisty commentary from Dimon or just the overall strength of the quarter, JPMorgan stock shook off the market's initial indecisiveness and broke definitively higher. It was solidly positive by the open on Friday and never looked back. Just a great company that reported an excellent quarter and saw its stocks roar exactly the way the market is supposed to work.
House of pleasure.
So how about Wells Fargo? All right, I'm spending a little less time on this one because you know what? We got a real treat here. Do you know that we have Wells Fargo President and CEO Charlie Scharf on tomorrow night? First interview since he took over almost 5 years ago. We'll get the full download on the quarter and where the company's headed then. By the way, we already did a detailed run-through of the results for the CNBC Investing Club. I urge you to sign up, or if you're not, just please read it. But let me just say this about Wells Fargo. It was even more impressive than JPMorgan, at least for me. While the revenue was in line and their net interest income was down 11% year over year, non-interest income jumped 12%, well ahead of expectations, and the cost came down, which allowed Wells to post a 14-cent earnings beat off a $1.28 basis. Now, Wells Fargo, it actually walked down its full-year net interest income forecast, but they also reiterated that their net interest income will bottom this year before rebounding 2025. And that was very encouraging to hear from Wells, especially after the analysts spent so much darn time hounding JPMorgan about next year's numbers. It's also really encouraging to see the continued strength for fee-based income, which tells you that Wells has found success in some of its newer ventures, like investment banking, where Scharf's making a big push. This is now much more of an investment bank than anyone ever imagined. Great business, and I hope that Wells Fargo keeps winning. There is room for it to keep winning. Overall, management simply had a lot of positive things to say about the economy, with Scharf noting that, I'm going to quote, quote, looking for changes in consumer health, but we have not seen meaningful changes in trends when looking at delinquency statistics across our consumer credit card portfolios, end quote. Sharp also then said, quote, company balance sheets are strong, contributing to both consumption and investment in the economy, end quote. Given that banks so often trade based on how investors feel about the broader economy, these were some very encouraging comments from Wells Fargo. And that brings me to the last point I want to make about Friday's bank earnings reports. While these quarters were certainly good news for JPMorgan and Wells Fargo, I think they're also good omens for earnings season in the market overall. This was an incredible reminder that a whole lot of stocks can work when the Fed is our friend again. And that's what I was thinking about when I heard Jamie Dimon's annoyed comments on the myopic analysts focus on a single line, net interest income, and what might or might not happen to that next year. Rather than getting bogged down in the details, it's better to focus on the positive overall picture, which is exactly what happened on Friday. Why stress about how quickly the Fed will cut rates? Oh, God, I'm sick of that. What matters is they're giving vast swaths of the economy a big boost, and I doubt they'll stop anytime soon. Bottom line, as we move on to the rest of earnings season, let's see if the other banks can possibly keep up with JPMorgan and Wells Fargo before hearing from the rest of corporate America. All I can say is if these two big banks are any guide, this is going to be a good earnings season, thanks in large part to our new best friend, the Federal Reserve. Let's go to Bernie in Arizona. Bernie.
Hey, Jim. How you doing?
Bernie, it's a good day. How about you?
I'm doing good. Hey, Jim, I need some help with SoFi. I have a position in SoFi. I've kept it for a long time. I actually didn't pay too much attention to it for a while. It's down now. Should I cut my losses, or should I actually invest some more now that it's lower? Booyah.
Well, look, thank you. It's up 10% today. They did this really good deal. They got $2 billion of Fortress investment to be able to originate some personal loans. Fortress is a firm that I think is absolutely tremendous. For them to be in there with these guys is extraordinary. This fintech combination private credit lenders is something new. And I think that I don't want you to buy. Look, we don't buy things up 10% in a single day. But wow, this is a brand new SoFi as far as I'm concerned. Let's go to Trey in Texas. Trey.
Jim, I love the stock market. 3 years ago, I was in a small studio apartment, and now I live in $1 million home with no mortgage.
That's what I want to hear, man.
Absolutely. So just after my parents bought me the house, I opened a Robinhood account and started trading with the money I previously spent on rent. And with rates falling, I jumped into Upstart last week, and I'm up a clean 30% already. Jim, do I take the easy dub here or wait and retire early with this one?
Okay, here's what I want you to do. I want you to do it right now, Trey. I want you to sell it and pay back your parents. Because I've heard everything. I thought for sure I was about to hear about NVIDIA and what NVIDIA's done for you and Amazon. No, it's your folks, okay? Now, I love that. And I think it's great that you gave them a shout out. But let's do this. Let's sell some of the Upstart, absolutely. And let's just, I don't know, throw them a bone. All right. If JPMorgan and Wells Fargo are any guide, I say this is going to be a strong earnings season, thanks in large part to the now friendly Federal Reserve. Can you believe we have Wells Fargo on tomorrow? Come on. When you heard that, weren't you excited? All right, much more Mad Money Ed. Excited about sitting down at Wells Fargo. Yes! Okay, including my exclusive with Adobe, fresh off a host of new product announcements. I'm hearing what the future of AI and the Creative Cloud looks like when I discuss it with Shantanu and Ryan. I got to tell you, the stuff that they have is just breakout. Then everyone wants to buy the underdog, so I'm revealing what cohorts I think have potential runways ahead of them. And, of course, all your calls rapid fire in tonight's edition of the Lightning Round. Why did my parents never give me anything other than a lot of grief because I wanted to stay at home and watch Phillies? Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.